Howdy, everybody. Welcome to Liberty Call. Today is Monday, May 12th, 2025. Hope you're having a fantastical day out there in the interwebs. Very nice day here in Colorado. It is not too hot, not too cold, and it's not raining, which is always good at this time of year because it does rain a lot in the springtime and there's nowhere for the water to go. So you get floods and things like that. So, all right. Well, today is May 12th. It's the day, 32 years ago yesterday, I was sat most of the day at the Met station for waiting to leave for boot camp in the Navy until today was my first real day in the Navy 32 years ago. So they shaved my head. Today I don't have much hair, but they shaved my head and we got clothes and uniforms and all that good stuff. We spent most of the day walking around in our Navy sweats. So blueberries or Smurfs, as we used to call them. So anyways, all right. Well, markets rocketed higher as the U.S. and China agreed to a 90-day tariff truce. The Dow jumped over 1,100 points, and the S&P 500 popped 3.3%, and the NASDAQ surged out of bear territory. Big tech and retail led the charge, but with the clock ticking on this truce, optimism comes with a countdown. Tick, 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 tick. So before we break into the news, I need some help from you. Give me some thumbs up, a like, share, subscribe, follow, and press that darn notification bell. All right, well, let's jump into the markets for today. Where did they finish? All right, Dow Jones was up 2.81%, 1,160 points, closed at 42,410. S&P 500 up 3.26%, 184 points, closed at 5844. NASDAQ up 4.35%, 779 points, closed at 18,708. The VIX was down 15.98% today. It's at 1840. Canada up 0.69, Brazil up 0.04, and Mexico up 0.38. Jumping over to Europe, Germany was up 0.22, the UK up 0.59, France up 1.37, Netherlands up 1.8. See here, Spain up 0.75%, Italy up 1.4, Switzerland up 0.9, and Portugal up 1.76. Russian exchange is green again today. MOEX up 2.73, RTSI up 2.7, and the overnight markets, the Nikkei in Japan was up 0.38. Australia up 0.03, New Zealand up 0.53. In China, the Shanghai was up 0.82, Shenzhen Component up 1.72, China A50 up 0.88, DJ Shanghai up 0.93, Hang Seng up 2.98%, and the Taiwan weighted when it closed last on the 9th was up 1.81%. All right. So those are our markets, folks. You see my new little sidekick back here, Mr. Nolan. Hey, little buddy. He's a good little watchdog. So, well, he's getting there. So, when he's not peeing on the floor. So, he's got a rough life too. All righty. Well, let's jump to the weekly economic update. Stocks were mixed last week as volatility dropped despite ongoing trade concerns and the Federal Reserve's update on short-term rates. The Dow added 0.16%, while the S&P 500 lost 0.47%. The NASDAQ slipped 0.27%, and overseas markets fell 0.37%. Stocks dropped on Monday, ending the S&P 500's 9-day winning streak as the trade anxiety weighed on investors. Sentiment picked up midweek, however, in a widely expected move. The Fed held short-term interest rates steady but warned of lingering uncertainty around tariffs effects on inflation and employment. On Thursday, the U.S.-UK trade deal sparked a slight rally, but stocks flattened as the week ended. Investors appeared to be risk-averse with U.S.-China trade talks scheduled for the weekend. And as we're going to talk about in a minute, seems like they've come to a deal temporarily. All right. The Fed fans out. The Federal Reserve wanted to get its message out last week. Within 48 hours, the Fed's decision to leave interest rates unchanged, nearly every Fed governor gave a solo speech or discussed the decision on a panel. One Fed official spoke about the benefits of long-term stability from an independent Fed. At the same time, another said the Fed was paying close attention to what consumers did and not just what they said, suggesting that flagging consumer sentiment didn't necessarily mean a slowdown in spending. The Fed seemed to focus on managing expectations. Perhaps more importantly, Fed officials spoke from a coordinated playbook possibly designed to help settle financial markets. Key economic data this week: Monday, the federal budget; Tuesday, consumer price index and the NFIB small business optimism index; Wednesday, the San Francisco Fed President Mary Daly will be speaking; Thursday, retail sales; jobless claims, producer price index, industrial production, business inventories, home builder confidence index. Friday is the import price index, housing starts, building permits, and consumer sentiment. Just a few companies reporting earnings this week. Wednesday, Cisco. Thursday, Walmart, John Deere, Applied Materials, and NetEase. All right, so that is everything there. Good stuff. Where are my guys at? All right, they're wandering around. All righty, let's get to the market recap. S&P 500 surges on tech-led rally as U.S.-China agreed to a trade deal temporarily. The S&P 500 surged on Monday, led by strong gains in tech stocks following a breakthrough in U.S.-China trade talks. After high-stakes negotiations in Geneva, both nations agreed to a 90-day tariff pause. The U.S. slashed tariffs on Chinese imports to 30% from as high as 145%, while China lowered duties on U.S. goods 10%. The joint statement signaled easing tensions and shared a desire to avoid economic decoupling, calming investor fears of a prolonged trade war. Tech stocks, including Amazon, Alphabet, and Apple, rallied on the news. Apple also gained additional momentum from reports suggesting it may raise iPhone prices without attributing increases to tariffs. China-linked companies such as Alibaba, PDD Holdings, and Baidu also surged. Investor sentiment improved broadly, with market strategist Alberto Matalan noting that while trust in the Trump administration has been damaged, the recent clarity offered by trade developments could pave a way for further market stabilization. Elsewhere, a ceasefire between India and Pakistan, brokered by the U.S., also contributed to market optimism, though Indian officials downplayed American involvement. In the healthcare sector, pharma giants Pfizer, Eli Lilly, and J&J fell after President Trump announced plans to cut drug prices by 59%, though details remain unclear. Conversely, energy stocks Chevron and ExxonMobil rallied as oil prices jumped on news of reduced trade tensions between the world's largest oil consumers. Investors are also eyeing a busy earnings week ahead, with results expected from Home Depot, Lowe's, Target, Snowflake, and cybersecurity firm Palo Alto Networks. Overall, markets responded positively to the trade truce and geopolitical easing, though long-term investor confidence may hinge on continued progress in tariff negotiations and clarity on domestic policy shifts. Boys are getting cranky back here, so I got to talk quick. All right. Let's get to our next article here from Zero Hedge. U.S.-China reach agreement to lower tariffs in 90-day cool-off period. Let's see what this says. The U.S. and China reached a major breakthrough in trade relations Monday, agreeing to a 90-day suspension of many tariffs, signaling a, quote, total reset, according to President Trump. In a press conference, Trump stated he may speak with Chinese President Xi Jinping later this week, further supporting optimism. U.S. Treasury Secretary Scott Bessent emphasized that both companies want to avoid economic decoupling and are now committed to a process that prevents future tariff escalations. Under the agreement, the U.S. will reduce tariffs on most Chinese goods from 145 to 30%, with a temporary 10% rate during the pause. China will reciprocate by slashing its tariffs from 125% to 10%. These measures are expected to stabilize global trade and provide relief to both economies. The talks also address the ongoing fentanyl crisis, with both nations pledging to crack down on precursor chemical flows. A new dialogue mechanism will allow trade representatives from both countries to continue negotiations, rotating between meetings between the U.S., China, or neutral locations. Markets responded enthusiastically. The S&P 500 futures rose 3%, NASDAQ gained 4%, and the U.S. dollar strengthened. Analysts expect a bullish near-term market environment due to easing recession fears and renewed investor confidence. All right, so some good news. All right, last up, got our Monday morning outlook from our friend Mr. Brian Westbury at First Trust. This week's article is "The Dollar Dying." So let's see what he has to say. Since January 10th of this year, the U.S. dollar has dropped about 10% against the euro, falling from 1.024 to 1.125. Similar declines occurred against other major currencies, including the British pound, Japanese yen, and Canadian dollar. Many analysts have used this decline to criticize President. Someone won't sit still, I'll just hold on to him. Many analysts have used this decline to criticize President Trump's tariff policies, suggesting that these trade measures are undermining investor confidence in the U.S. and accelerating capital flight. However, the article argues that such fears are overblown and politically motivated, pointing out that the doomsday economic forecasts since 2008, like calls for stock market crashes or the dollar's demise, have consistently been proven wrong. In a broader historical context, the dollar remains within its normal range over the past 5 to 10 years. A more grounded explanation for the dollar's recent weakness lies in the massive surge in the U.S. trade deficit, driven by importers rushing to front-run Trump's tariff hikes. The trade deficit reached $140 billion in March of 2025, up significantly from the $70 billion monthly average of recent years. This surge effectively dumped an additional $212 billion worth of U.S. dollars into global markets in just 4 months, leading to a temporary oversupply and weakening of the dollar's exchange value. Because the dollar is the world's reserve currency, other nations accumulate and hold dollars for trade and financial stability. But when the U.S. sends out far more dollars than normal through a bloated trade deficit, it creates an imbalance, too much dollar supply chasing the same demand. The article concludes that once the front running of tariffs slows, the dollar is likely to stabilize or rebound as supply and demand return to equilibrium. The dollar, despite recent turbulence, is neither dead nor dying. Well, I think it's probably dying personally, just because of all the money creation and inflation, and our government being ridiculous about stuff. So, as you can see, little Nolan here. Hi, say hi, Nolan. Hi. He is very excited to be a member of the team here. So, all right. Well, we're going to finish up the day here, and I got some other stuff I got to work on this afternoon. But going to go have some ball time with my little assistants, and hope everyone out there has a wonderful afternoon. So, all right. Well, if anyone needs to get in touch with me, where do you need to go? Doodle-doo-doo-doo, DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help get you on track. And you can meet my new friend here, Nolan. He's named after Nolan Ryan, only the greatest pitcher to ever grace a baseball field. So anyways, let me put it down. Woo! All right. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.